Happy New Year, everyone. Welcome to a Wall Street for Main Street podcast special. My name is Mo Dawoud, and today's special guest is Paul Dimitriadis, the COO of Sprott Resource. Hey, Paul, thank you for joining us, and Happy New Year.
Happy New Year to you, and thanks for taking the time.
It's great. And I wanted to start this interview by talking about Sprott Resources. And for the listeners that never heard of this company, can you tell us what this company's about and what you guys do?
Sure. I'll give you a bit of background. Sprott Resource Corp is essentially a publicly traded private equity fund that's listed on the Toronto Stock Exchange. Has a market cap of about $450 million. We've been around about 5 years, and essentially we invest in private resource companies and assets. Oil and gas, mining, agriculture are the three main areas in which we're invested.
Okay, and do you guys provide financing for any of the commodities, natural resources companies out there that need it? That's correct?
Yeah, we do. We'll provide it usually in a structured way, whether it's by way of an equity investment at the private stage or perhaps a joint venture or similar type of structure. We generally don't invest in publicly traded companies, so we're not like a typical mutual fund. We get involved in things early on. We partner with management teams to grow businesses from an early stage to producing assets.
Okay, so does Sprott Resource get involved in royalty deals or streaming deals, or they don't do that?
We haven't to date. We've looked at quite a few. We haven't found ones that have we've been able to execute on, but we certainly would entertain doing a royalty or streaming deal. Essentially, the form of the structure is open for us. We're really here to cater to what the companies need and provide the best form of financing to meet their needs.
And that's great. And what's the ticker symbol for Sprott Resource?
It's SCP on the Toronto Stock Exchange.
And that's great. Now I want to fast forward here, and now that we're entered the year of 2013, I wanted to discuss the macroeconomic outlook for the global economy. Today, the central banks around the world continue to print money in order to stimulate the economy. Japan is doing it. Obviously, the U.S. is doing it. UK, Europe. So I wanted to ask you, what's your outlook for the year 2013? Do you expect more of the same compared to 2012, or do you see something new or different that might pop up in the economy?
Well, I think it'll be, in essence, more of the same, except I think we've seen evidence in certain parts of the world that the methods that they've been using to prop up the economy aren't really working. They're perhaps working to keep up the stock market because of the excess liquidity they're pumping into the system. But in terms of creating jobs for everybody, which ultimately you need to be able to consume products, they're not really having much of an effect. I mean, in the U.S., the jobless rate seems to be dropping, but that's more a function of people ceasing to look for work than it is, jobs getting created. I mean, if you look at the amount of people who are going on food stamps in the United States, it's at a record high. The amount of people who are on some form of government assistance is, I believe, at a record high. And, around the world, notably in Europe, things are perhaps even in worse state with unemployment in the 20-plus range in Spain, Greece. Italy's entering a severe recession. I think this is now a triple dip for the United Kingdom. So there's problems all over the place. And as you mentioned, Japan and their new Prime Minister Abe are getting into the printing process now, trying to resuscitate their economy that's been in a depression for, well, not a depression, but a prolonged recession, let's call it, for a couple of decades now. So the central bankers continue to employ the same techniques again and again, yet the practical effect of these techniques is not really materializing.
And now there's a lot of experts out there that are predicting a hyperinflation event that might happen in the U.S. economy. Now, we haven't seen it yet. In 2012, we saw more of a stagflation where we had high unemployment and high inflation. Do you believe hyperinflation is coming around the corner, or do you think we'll have continuing stagflation in the economy?
Well, I think the safer bet is for continued stagflation with high unemployment and increasing rates of inflation. where you might get the risk of hyperinflation is in the foreigners essentially trying to repatriate all their U.S. reserves that they're holding. I mean, for the past 40 years, foreigners have been continuing to subsidize the purchasing of U.S. consumers by accumulating U.S. dollars. At some point, one would think that this process would stop, and they would look to convert some of those dollars into tangible goods. And at that point, I think there is a serious risk that you run into some more rapid form of inflation when that money starts hitting the U.S. shores again. When that happens, I'm not sure, but these things tend to happen very quickly once they get started, and I think it'll be a question of one of the large holders, whether it's China, Korea, Japan, trying to take possession of real assets in exchange for all that paper money that's been piling up in their bank accounts.
And they've been decreasing. China had been decreasing their treasury holding in the past couple of years and buying natural resource like your company had been doing.
Yeah, that's obviously going to be an increasing trend. You see that they've been acquiring some oil sands assets in Canada, some gas assets. They're active in Africa and South America, buying mining assets, farming assets, and they'll continue to do that. And it's wise of them to do that because obviously long term the value of those treasury bills is not going to be increasing at the same rate as the value of the resources they're acquiring. So I think that is going to be an increasing trend. They're going to be, I think, long term precluded from doing that on a mass scale by governments because they're going to start imposing restrictions on their ability to spend that money, if you will, in the United States and Canada and other jurisdictions. And you'll probably see them having to partner up with either other financial players or taking minority interests in companies rather than controlling stakes, because controlling stakes of large assets is going to make the governments of these countries very nervous.
Yeah, and in the U.S. have done a good job overall hiding inflation. One of the ways they do it is they export the inflation to other countries that peg to the dollar, like China.
That's
but
right.
then the inflation comes back through the imported good that the U.S. consumer buy. So, would you agree with that?
Yeah, I mean, I agree with that. What's happening in the world, as I like to call it, is an equalization of living standards. And you're seeing the U.S. consumer and the consumer in a lot of these other Western countries getting priced out of global markets. And the prime example of that is, the oil market and other resource markets where they have to be competitive with other people around the world for that product in the sense that it's a global product and they have to bid for it like everybody else. And because the demand for that product is going up, largely by the demand increasing in the emerging markets, the U.S. consumer is finding it more difficult to purchase that product, and the result is a higher price in U.S. dollars and then getting priced out of the market. So that's how I see the inflation effect on the U.S. consumer through the resource sector, at least.
Yeah, I agree with you there. And the inflation would somehow is creeping back into the global supply chain, and when U.S. Consumer buy those imported goods, they'll see the inflation that showed up through goods and services. So I want to shift gears here and talk about the natural resource sector. So I want to ask you, what commodity are you bullish on for the next few years, other than gold and silver? Because I know Sprott Asset is very bullish on that, on precious metal market. But other than those two commodities, what other commodity are you bullish on for the next few years, and why?
Well, I think I'm bullish on the oil and gas market. Continue to be bullish on that, mostly because of supply issues and demand issues, but mostly supply issues in those markets. So we could talk a bit about that. And I think that some of the other markets that are perhaps nearing cycle lows right now might be, the uranium market, for example, and the coal market. Those have recently been decimated and might be approaching some type of cycle low.
And you just briefly mentioned the uranium market. Now, it's been hit badly in the past couple of years, mainly because of what happened in Japan. Do you think it's now the good time to get back into uranium market and start looking at the uranium miners? Since in China they're building nuclear power plants every year, and so the demand for uranium will always be there. And even though we have Germany also talking about shutting down their nuclear power plant, which I don't think that will happen. Do you now believe uranium is a good buy now, or do
I think if you've got a longer time frame, it's hard to again precisely pick the bottoms on these things, but I think in a longer time frame, it is a good buy. I mean, it's obviously a lot of these companies can't make money at these prices, so something has to happen to enable these companies to produce profitably. And at cycle lows, that's what happens. And if you can be patient and acquire things at these times, you'll probably be quite well rewarded. And for all the reasons you mentioned, specifically to the uranium market. And I think Japan will come back to the uranium market. I know there's been some talk about them never purchasing their uranium again and shutting down all their nuclear facilities. But with the cost they're spending on importing energy, it's really prohibitive for them to keep doing that, I think.
I agree there. Yeah, Japan, they're having trouble with their trade deficit. I mean, not trade deficit, but their deficit, spending deficit. Yeah. So if they wanted to go to another alternative energy, that would be put a hamper on their spending deficit. So yeah. I agree with you there that I think they'll continue to use nuclear power. Maybe they'll update it and use newer technology for their nuclear power plants.
And maybe not have it in an earthquake zone as well.
Yeah, I agree.
Also, with the yen collapsing the way it has in the past few months, I mean, those imports of oil and gas are not getting any cheaper.
Yeah, I agree with that. Now, you briefly discussed the oil market. I don't know if you're a believer in peak oil, but one of the reasons why I think oil is going higher is not because I think we are running out of oil or anything, but I think we're running out of cheap oil that we are all used to in the past couple of decades, where you can go poke a hole in the ground and just a gush of oil that start coming out. And those oils, sweet, light crude oil, is this kind of stuff we're running out of in this planet. And now they're switching over to the oil sand and heavy oil. So what's your outlook for the oil market for the 2013? Do you think oil prices will go sideways, or do you think it will go up?
I think they're largely going to stay sideways. I think we're going to have some headwinds in the economy, which will cramp demand a little bit. But as you pointed out, there's serious supply issues long term with oil. Despite all the hoopla you hear about U.S. energy independence and all these booming supplies of oil, the reality is we're not finding any new elephant oil fields out there. And all the new supplies that are coming on are supplies that decline at a very, very rapid rate. And increasingly, the global decline rate for existing production is rising every year. And so the amount of oil you need to find and bring online every year just to replace the declining production is very high. And you can't do that in an environment where oil, let's say goes down to $60. I mean, things like the Bakken oil field just don't work at that price. So I think that we've got a floor under the oil market of around, let's say, $80 WTI. And whenever we're going to creep up, let's say, above the 120 mark, you're going to see serious demand destruction take place, principally in the developed markets, which will balance out the market at that point. It seems like we're stuck in that range for a little bit of time.
And also, a lot of governments out there that depend on higher oil price for tax revenue. I think it's in their best interest that the oil prices doesn't collapse. Otherwise, they won't be able to meet all those campaign promises that they made during elections or maintain the type of government that they have out there.
Yeah, well, that's a good point. The Saudis have been explicit in saying that $100 oil is their balancing price for maintaining their social programs. Russia's is quite high as well. So these prices are necessary to keep stability, social stability, in a lot of places where we've seen issues in the past couple of years.
And I agree there, and I think the OPEC countries are trying hard enough to make sure that doesn't happen. Now, I want to shift gears here and talk about the financing state of the miners out there. I know you guys talk to a lot of people in the natural resource industry. Can you give our listeners the state of all the natural resource companies out there, finance-wise, how they're doing, and are they improving or are they deteriorating? Because I know in the gold and silver market, when gold and silver corrected, I know a lot of the miners out there were hurting, and it affected them, and a lot of them had to dilute the shareholder or go bankrupt or sell their assets for pennies on the dollar. So can you give our listeners an insight on that?
Yeah, I mean, I think it's pretty well known right now that the junior resource market has had a terrible year, and 2012 was a miserable year for the junior resource market in Canada. And I don't think it's getting better, so to speak. And a lot of companies are stuck and are going to be orphaned pretty soon. I mean, there's even companies out there with advanced feasibility stage projects that are having trouble getting them financed. I mean, these are real projects that, in ordinary times gone by, they would have been able to get financed. But there's definitely a challenge right now getting money raised for projects like that. A lot of this is stems from the fact that some of these junior companies really should never have existed to begin with, because they didn't have real projects, and a lot of investors lost money even during high commodity prices investing in these companies. So I think there's a weeding out taking place between what's real and what's not real. And ultimately, I think real good projects will get financed, but a lot of these other companies with questionable assets really probably won't come back.
And one of the things I find frustrating when investing in the natural resource industry is a good management team, because there are not very many good management team out there that know how to plan properly to get a mine in production or an oil well into production or stuff like that. Do you agree with that assessment that there's just not many good management team out there that doing things the right way for the shareholders?
I think that's true, and I think that goes top to bottom. I mean, people have criticized even the very large gold companies for not providing their shareholders with a proper return on their capital. And in essence, I think that's a useful role. It is principally our role here at Sprott Resource Corp, is to try to ensure that we finance projects and our investors get a return on capital. I mean, we're the disciplined force in a lot of these projects and saying, look, we'll give you $50 million to build this, but we want to get paid back in 2 to 3 years, and we want a good return on our money. What you see so often in the junior resource sector is the money, maybe someone actually pulls off building one mine, and the money from that mine gets diverted to fund, unjustified exploration that doesn't actually return any value to shareholders. So I think you're going to see a larger focus on companies paying back their shareholders and not diverting funds, to questionable secondary projects.
Why do you think there's a lot of bad management team out there? Is it because they have no experience doing this before, or they don't know the finance side, where they have to be mindful to the stakeholders and shareholders and do right for them, or is it a combination?
I think it's a combination of all those things. I mean, often you have times where in some of these junior companies, they'll be started by a geologist that, his prime experience is not really finance or generating proper returns and understanding how to do that. It's to find commodities. And they may be very good at that, and they may be very challenged at putting together a business plan to develop the mine, ultimately. So they just start at it haphazardly, and then it doesn't really work out. Sometimes, as with any business, you have issues of management entrenchment, and management teams doing things that might be good for them, but not necessarily good for the shareholders. So there's a variety of reasons why things don't work out. Each company's got its specific problems.
And that's one of my red flags when I look for a natural resource company to invest in. It's the CEO, the geologist. That's kind of a red flag for me because they have no experience managing a company and financing it and, et cetera. So
I agree with that, and that's why we take comfort in the fact that we usually have controlling stakes in a lot of these companies or investments we make. So we sit on the board of the company. We're there at the meetings when key issues get decided, or we have contractual ties to a particular project that guarantee us payback on our money. So it's important to have a seat at the table and make sure nothing really goes awry without you knowing about it. It's tough to be a passive investor in these types of companies.
I agree. It is tough. It's very tough to invest in a natural resource industry because it requires a lot of patience because some of these mines or whatever they produce takes a while to get in production.
Oh, I mean, I agree. When we started the company, we invested in a company called Stonegate Agricom, which is developing a phosphate project in the United States and another one in Peru. We invested in that 5 years ago at the claims level. We bought the claims off a couple of geologists. And they just completed the full feasibility study on one of their projects 5 years later. And it won't be built for another 2 years. So it's 7 years from staking the claim to production, which is not atypical.
Yeah, and that's a loss in time value of money and loss of opportunity costs there too.
Yeah,
because that money could have.
Sorry, go ahead.
I'm sorry. That money could have been invested in another company that's doing better elsewhere.
Yeah, well, fortunately, if you have a good capital strategy, you can raise money appropriately over that period of time, so you're not tying up money unnecessarily for 7 years. That's why it's important to have a very good strategy on that front.
And I agree. So I have one final question for you. And, because all the junior mining companies or natural resource, small cap natural resource companies, a lot of them are struggling. That would result in consolidation in these industry where the big guys will come in and buy their assets for pennies on the dollar. Do you see that coming?
I think so. I mean, I think there's going to be a role for someone, whether it's a financial player or a mid-tier or large-cap company, to come in and buy some of these quality projects at good valuations. To date, we haven't really seen that, and I think a part of it is because the large caps have been struggling showing good returns to shareholders on their own projects. So a lot of them are leery of taking on new projects. I'm just speculating on that, but it might be one explanation why they haven't gone actively in M&A to date.
Well, that's great. Well, Paul, I'd like to thank you for coming on to Wall Street for Main Street podcast. If people want to find more about Sprott Resource, where can they go?
Direct them to our website, SprottResource.com.
And that's SprottResource.com. All right. Well, thank you, Paul, and hopefully you can come back on later for another podcast.